Buying a home in Southern California is an exciting but complex process, and being prepared can make all the difference between winning the right home and missing out. So whether you're relocating, upsizing, downsizing, or looking for even a new construction home, understanding each step before you begin can save you time, stress, and money. And that's exactly what we're covering in today's video, a detailed step-by-step breakdown of the entire home buying process here in Southern California, so you know exactly what to expect from the moment you start your search to the day you get your keys. Now, buying a home in different states is a different experience, as laws and practices vary from state to state. So this is the definitive guide to buying a home in Southern California. Now, this isn't just for first-time home buyers. It's really for anyone planning to buy a home in 2025. The market has changed, and so have some of the rules. So whether you're a seasoned home buyer or maybe a first-time buyer, knowing how to navigate financing, house hunting, making offers, and closing the deal is critical to a smooth, successful transaction. Now, we'll also briefly touch on some special programs that are available for first responders, teachers, nurses, and physicians, as well as the changes in loan regulations that could impact your purchase. But more importantly, we'll focus on what really matters: the process, the strategy, and key steps to buying a home the right way. And we'll break this process down into 3 key phases. First, financing and preparation is a critical first step where you determine your budget, secure pre-qualification, and get ready to shop confidently. Next is house hunting and making offers. So how to find the right home, what to expect in today's market, and how to structure a competitive offer that gets accepted. And next is the purchase process and closing. So what happens after your offer is accepted? Navigating inspections, contingencies, appraisals, and ensuring a smooth closing. So by the end of this video, you'll have a clear roadmap for buying a home in 2025 here in California and be ready to move forward with confidence. All right, let's jump right into phase 1, financing and preparation. So this is the essential first step before you even start looking at homes. Before you start looking at homes, the most important first step is securing your financing. So it may be tempting to browse listings, to attend open houses, even schedule showings, but without knowing exactly what you can afford, you really could end up falling in love with a home that's out of your budget or missing out on an opportunity because you weren't financially ready to act fast. So the real estate market moves quickly, and in Southern California, the most desirable homes can sell in days, sometimes with multiple offers. So if you're serious about buying, your first move isn't house hunting, it's getting pre-qualified so you can shop strategically and submit an offer with confidence. So you probably heard of both pre-qualification and pre-approval, but they are not the same thing, and understanding the difference is really critical. So first, pre-qualification. This is a quick, generally high-level financial assessment where a lender estimates how much you can borrow based on some very basic financial details like your income, your debts, and a credit score. It's a relatively informal step, but it helps set realistic expectations and ensures you're shopping in the right price range. Now, pre-approval is a formal verification process where the lender reviews your financial documents, runs a credit check, and provides a pre-approval letter stating how much they're willing to lend you. And this is often very helpful when submitting an offer in most cases because it tells sellers you're financially qualified to buy the home, and it helps you stand out from other buyers who only submitted offers with a pre-qualification letter. Now, the best way to start is by speaking with a reputable lender. So here's what that process looks like. First, step 1, choose the right lender. You can work with a major bank, a credit union, a mortgage lender, or a mortgage broker, and each of these has its own pros and cons. So major banks, we're talking like Chase, Wells Fargo, Bank of America, they often offer the absolute worst mortgage rates and are the slowest to issue documents and close escrow. But some credit unions can offer very competitive rates and great loan programs if you're a member. Now, mortgage lenders specialize in home loans and often provide faster, more flexible service with much better rates. A mortgage lender is actually a mortgage bank, meaning they will be the ones issuing your loan. The downside here is you're limited to the programs and products they offer in-house, and it may be a little harder to compare different options. Now, mortgage brokers can shop around multiple lenders to find the best loan for your situation, especially if you have unique financial circumstances. And this is the best way to see a broad range of lenders and loan products and easily compare rates and costs. Now, important pro tip: when comparing lender products, never just compare their loan rates, the interest rate. You always compare their APRs, or annual percentage rates, which are calculated to take into account their fees. So not only should you compare the different APRs between lenders, but you should also be comparing the gap between the lender's interest rate and their APR, because the wider that gap, the more junk fees they are stuffing into the loan and ripping you off. Now, step 2, submitting your information. So for pre-qualification, you'll just provide really basic details like income, employment, your debts, debt obligations, and the lender will pull your credit score. Now, for pre-approval, you will be asked for more detailed documents, including potentially tax returns, W-2s, pay stubs. Self-employed borrowers should prepare tax returns, bank statements, and an audited financial statement if you have one. Now, step 3, you're going to get your pre-qualification estimate. The lender will provide an estimated loan amount and potential interest rate based on your financial profile. So once you get this pre-qualification, you'll need to decide on the right loan type. Although, depending on your credit and income, this decision may be made for you. So here are some of the most common options for loans. Conventional loans. This is really the most widely used option. It's ideal for buyers with strong credit and at least 5 to 20% down. So these loans offer competitive rates and fewer restrictions. There's also FHA loans. These are government-backed loans requiring as little as 3.5% down. They're great for buyers with lower credit scores or less cash for a down payment. But they also include high fees, which are often rolled into the loan and need to be financed, and that can raise the APR. Now, there are also VA loans. They're exclusive to active duty military members, veterans, and eligible spouses, and they offer 0 down payment and competitive interest rates, but also with some fees and some restrictions. Now, very common here in Southern California are jumbo loans. They're required for loans that exceed the conventional conforming loan limits. And in most of Southern California, like LA County, for example, that's around $1.2 million in 2025. These loans typically require higher credit scores and much larger down payments. Now, there are also special loan programs. So some buyers qualify for special loans with better terms. So, for example, first responders, teachers, nurses may have access to down payment assistance programs or special loans, and those needing down payment help could also look into some of the programs like Cal HFA and the HUD's Good Neighbor Next Door, which offer reduced rates and down payment assistance. Now, if you're a doctor or a dentist, there are physician loans designed for doctors and dentists and medical professionals, and they often allow a very low or no down payment loan with no private mortgage insurance. Now, in competitive markets like Los Angeles, Orange County, the Inland Empire, most sellers won't even consider an offer without at least a pre-qualification letter. Now, for buying a new construction home, this step is 100% non-negotiable with literally every home builder. So the bottom line for home sellers, if you're not pre-qualified or even pre-approved, you just aren't a serious buyer. So by securing a pre-qualification, you know your exact budget, so you're not wasting time on homes you can't afford. You can move quickly when you find the right home rather than scrambling at the last minute to get financing, during which you may end up losing out on the home that you really want. And you're showing home sellers you're financially qualified. You're making your offer stronger and more likely to be accepted. So getting pre-approved or pre-qualified is step one, but there are a few more financial details you need to consider before you start looking at homes. First, your down payment will typically be 5 to 20% of the home's price, but closing costs, which include lender fees, escrow fees, and title fees, can add another 2 to 3%. So make sure you budget for both. Even a no down payment loan will have closing costs, or to put it maybe another way, you can't buy a home and move in with nothing out of pocket. Now, many lenders require additional savings beyond your down payment, often enough to cover 2 to 3 months of mortgage payments. But I always recommend at least 6 months of reserves to my clients for an extra safety cushion. And I cannot stress this enough. Never ever shop for new credit, open new credit lines, or make big purchases like a car before closing escrow. Doing so could disqualify you from the loan and cost you the home. Even going into like a furniture store to look at new furniture and submitting a credit application could jeopardize your home loan. Also, no job changes or reductions in income or work hours. Now, interest rates fluctuate every day, and locking in a low rate at the right time can save you thousands over the life of your loan. The trick here is getting the timing right. A good lender will help strategize this vital step with you. So pre-qualification and pre-approval are the foundation of a smooth home buying experience. They determine what you can afford, help you move quickly when the right home comes up, and make your offer stronger in today's market. So now that you've secured financing and know your budget, well, it's time to start house hunting. So in the next section, we'll cover how to find the right home, what to expect in today's market, and how to structure a competitive offer that gets accepted. So phase 2, house hunting and making offers. So now that you've secured financing, you know your exact budget, it's time for the most exciting part, and that is finding the right home. But in a fast-moving market like Southern California, it's not just about browsing listings and attending open houses. To find the right home at the right price, you need a clear strategy and a strong offer that puts you ahead of the competition. So in this section, we're going to cover number 1, how to search for homes efficiently and avoid common pitfalls, what to look for during showings and open houses, and how to structure a strong competitive offer that gets accepted. So first up, searching for homes the smart way. Now, there are plenty of online tools to browse listings, but quite honestly, not all platforms are created equal. The best way to stay on top of the market is to use multiple sources and set up real-time alerts for new listings that fit your criteria. Now, the MLS, the multiple listing service, is the most accurate and up-to-date data source for new listings. My website, which is beachcitiesliving.com, is directly connected to the MLS and updates with new listings and listing updates in real time. And you can build customized MLS alerts that notify you instantly when a home matching your criteria hits the market, or just ask me to do it for you. Now, the public listing sites, we're talking Zillow, Redfin, Realtor.com, Homes.com, these sites syndicate MLS data, but they often lag behind. So you only want to use them as a secondary source to browse listings and research neighborhoods. In many cases, especially with Zillow, the information is so out of date to be often unusable. So here's a pro tip. Most of these websites are designed not so much to show you home listings, but actually to collect your personal data and contact information to sell to multiple real estate brokers who will start calling you constantly. They are not really set up to sell homes. They're actually set up to sell you. So try to avoid these websites where possible. Now, there are off-market and coming soon listings, and some homes will sell before they even hit the MLS. And because I have access to insider information on coming soon homes and off-market properties that are not being advertised, we can sometimes find hidden homes the general public never knows about. Next, setting up an effective and efficient home search is very important because narrowing your criteria to what you're really looking for can avoid information overload. So focus on specific zip codes or neighborhoods that fit your lifestyle and commuting needs. Now remember, Southern California is not a neighborhood. The tree section of Manhattan Beach is a neighborhood, for example, or you can look at smaller sized cities like Hawthorne, Cerritos, or Corona. Now, larger cities like Los Angeles or Riverside really should be broken up into the neighborhoods that really interest you. Now, next is price range. We're going to use your pre-approval or pre-qualification loan amount as a guide, but also factor in room for negotiations. So for example, if your maximum budget is $1 million, consider homes that might be up to $50,000, like $1,050,000, that might accept offers below the list price. Then consider your must-have features. So for example, the number of beds, bathrooms, square footage, the lot size, and home type, like single family versus condo or townhome. And then next, we're going to set our real-time notifications. So choose instant or daily alerts so you don't miss new listings. If you're just starting your search and are maybe a few months out, well, perhaps a daily summary might be good enough. But if you're ready to put in an offer, well, instant alerts are crucial. Now, pro tip, the best homes often go under contract within days. So being among the first buyers to view a property can give you a significant advantage. So now that you're receiving new listing alerts, it's time to visit homes in person. So whether you're touring an open house or scheduling a private showing, knowing what to look for will help you make informed decisions and avoid costly surprises. So here's what you want to focus on during your in-person home tour. First is curb appeal and the exterior. You're looking for signs of deferred maintenance, roof condition, driveway cracks, peeling paint, and overall exterior wear. Inside the interior layout and flow, you're going to ask yourself, does this layout match my lifestyle? Open floor plans, size of the kitchen, bedroom placement. Well, these are all harder to change than cosmetic updates, so you want to find a home that matches your wish list as close as possible. But having said that, remember to be flexible with the smaller issues like easily fixed cosmetic problems. For example, if a bedroom is painted pink, there's an easy thing to fix and shouldn't disqualify the home if it has the features you want. Also, major systems and big red flags. You want to pay attention to the roof age and condition, as it can be really expensive to replace. Are the windows and doors energy efficient or outdated? Are they old single pane windows or newer? Now, while the home inspector will check these items thoroughly, the AC and heat, the plumbing, the electrical systems, they're all important considerations. But, for example, have a look at the AC unit that's outside. Does it look old, rusty, and worn out, or is it new and in good condition? Inside, you're going to look for cracks in the walls or ceiling, bubbling or dark spots in the paint that could suggest water leaks. If there is a home you really love, try to visit the home, at least on the outside, at different times of the day and evening to assess natural lighting and noise levels. Now, another pro tip. Many listing agents love to enhance their listing photos with these spectacular sunsets. Make sure this makes sense. So for example, if the home is oriented north-south, you'll never see a sunset like they have in the photo. So don't be swayed by those fancy photos. Next, you want to check if the home is part of an HOA. If it's a condo or a townhome, review the HOA fees, the rules, and amenities before making an offer. But honestly, don't be automatically turned off by the presence of an HOA, as it might include amenities that you're going to want, and the HOA enforces neighborhood standards, which preserve property values. Selling a house for top dollar isn't easy when a neighbor has a junk car up on blocks, or another neighbor painted their house neon pink, or has loud parties every Friday night. A well-managed HOA can help guard against difficult neighborhood problems. Now comes step 3, making a strong competitive offer. So once you've found a home that checks all the boxes, it's time to write an offer. But in competitive markets, submitting a strong, well-structured offer can be the difference between getting the home or losing out to another buyer. So every offer consists of 3 main components. First is the purchase price, how much you're offering for the home. So market conditions, comparable sales, seller motivation, the general economy, how things are going, this should all guide this number. As a buyer's agent, I'm going to guide you through different strategies designed to get you the home at the best possible price, while leaving us some room for possible adjustments during your contingency period. Now, next we're going to define our offer terms and those contingencies. So these include your financing details, your down payment amount, those contingencies, so your inspection, appraisal, and loan contingencies, and any special requests. And we also include our buyer agent compensation in our offer. Well, it's normally expected here in California for the seller to still cover this cost. Next, and very important, are our timeline and closing period. So typical escrow periods range from maybe 30 to 45 days, but they can often be shortened for a competitive advantage if your lender can close faster. But consider your moving plans, if you have a home to sell that you're trying to close escrow on as a seller, or if you're renting, your notification obligation to end the lease. Getting your offer to stand out in a competitive market, or even a slow one, is important, and that's just one of the things that I do for you. So for example, before we even write an offer, I will be in contact with the listing agent to ask questions like, well, are there multiple offers? What terms matter most to the seller? Do they want a faster closing, a lease back? Would they prefer a higher price or fewer contingencies? So when there are multiple offers, I also used advanced offer techniques that most agents don't seem to use or really understand, such as an escalation clause. So an escalation clause automatically increases your offer by a set amount above competing offers up to a maximum limit that you set. So you can always be one step ahead of other offers already in hand or that come in after yours. A strong negotiating position includes a strong earnest money deposit. Now, California limits deposits to 3% of the home price, but offering the full 3% signals serious intent and strengthens your offer. Now, we have some strategies around contingencies. So while we will never waive certain contingencies like the inspection contingency, for example, we can still be strategic. So with the inspection contingency, we're not going to waive it, but we may shorten the time frame. So for example, 5 or 7 days instead of 17 days. Offering an appraisal gap coverage. So if we suspect the home may not appraise at the price that we're offering, you can offer a small buffer to cover that difference. Another strategy is to offer or agree to flexible closing and seller concessions. So offering the seller a friendly timeline or allowing them a temporary lease back if the sellers need more time to move. And that can make your offer more appealing to them. So if your offer is accepted, you'll immediately move into escrow where you'll finalize inspections, appraisals, and loan approval. But if your offer isn't accepted, you have some options. First, if you receive a counteroffer, the seller might request a higher price, different closing date, or modified terms. So you can accept, you can counter them back, or you can just walk away and continue looking for something else. Now, if you're in a multiple offer situation, the seller may ask you for your best and final offer. So this is where stronger terms, not just price, can set you apart. Now, if your offer is rejected, it's not uncommon. We learn from the experience, and I will try to find out from the seller what could have made it stronger, where our shortfall was, and that way we'll be ready for the next opportunity. Now, at this point, you've secured financing, you've found the perfect home, you've had your offer accepted. Congratulations. But the journey isn't over yet. It's actually, in many ways, just starting. Now you're entering escrow, where there is all this behind-the-scenes work that happens to finalize the transaction. The escrow and closing process is time-sensitive and full of critical steps. So if something is missed or delayed, it can jeopardize the entire deal, or worse, cost you thousands of dollars. So first, what is escrow? It's a neutral third-party service that holds money and documents until all conditions of the sale are met. So it ensures that both buyer and seller fulfill their mutual obligations before money and ownership officially changes hands. And here's how it works. The escrow officer, escrow company, acts as a middleman between all parties, so buyer, seller, lender, and the title company, to coordinate the closing process. Funds are held in an escrow account, including your earnest money deposit, or EMD, which is applied towards your down payment at closing. Escrow is going to ensure that all contract terms are met before money is released and the deed is transferred to you. Now, pro tip: your escrow officer is not your agent or your lender. They cannot give you legal or financial advice. Their only job is to facilitate the transaction and ensure everything is in compliance. So here's some of the key steps and deadlines we need to watch out for in escrow. So first, escrow typically lasts about 30 to 45 days in a standard transaction, although like I mentioned earlier, some lenders can close faster. But here's what happens step by step. First step, your earnest money deposit and opening escrow, and this is days 1 through 3. As soon as your offer is accepted, you must wire your earnest money deposit, or EMD, to the escrow company, usually 1 to 3% of the purchase price. Next, your lender is going to order the appraisal to confirm the home's value. The escrow company is going to provide initial disclosures and instructions for both the buyer and the seller. Now, the deposit must be received by the 3rd day after we open escrow, or the seller can decide you're in default and cancel the transaction. So, another pro tip: wire fraud is a growing concern. So always verify escrow wiring instructions by calling the escrow company directly before sending any money. In most cases, both the bank and the escrow company will require that you go to the bank in person, and the escrow company will only provide the wiring details to an employee of the bank once they verified their identity. Now, next step are home inspections and due diligence. This is really like days 1 through 17. So we're going to schedule a general home inspection immediately. Depending on the property in terms of the sale, you may also need a termite inspection if one is not going to be provided by the seller, a sewer line inspection, or for some homes, a septic certification. And there may also be roof, foundation, or mold inspections if there are any red flags that come up in the general inspection. Now, important, the inspection contingency period is usually up to 17 days. If major issues are found, you have the right to either request repairs, ask for a price reduction, or even cancel the deal. Now, another pro tip here: sellers are not required to fix anything. They're more likely to negotiate if your request is reasonable and backed by inspection reports. Now, next, days, usually 10 to 17, is our appraisal and loan approval. So your lender's going to send a licensed appraiser to assess the property's fair market value. If the home appraises at or above the purchase price, great. Everything moves forward, no problem. If it appraises below the purchase price, you have three options. First, you can negotiate with the seller to lower the price. Second is you may be asked to pay the difference out of pocket if you're able to do that or even willing to do that. And third, we can use the appraisal contingency to just back out of the deal and walk away if that is what we're left with. Now, important to know that lenders only finance up to the appraised value. So if you offered above market value, you'll need to make up the difference in cash if you want to move forward with buying that home. So next, we have our final loan approval and removing our contingencies usually by day 17. So your lender has verified your employment, your income, and the assets one last time before they issue a final loan commitment. And at this point, before day 17 or by day 17, you must remove all contingencies, including your inspection contingency, which confirms you're satisfied with the home's condition, the appraisal contingency, if the home is appraised as you expected, and the loan contingency once that final loan approval is received. So important. After contingencies are removed, your earnest money deposit is no longer refundable. So if you back out now, you will probably lose your deposit. So now, final walkthrough and a closing disclosure. This is days 25 to 30. So we're going to do a final walkthrough of the property, usually 24 to 48 hours before closing. We're going to ensure it's in the agreed upon condition. Next, you're going to receive a closing disclosure from the lender. It has to be at least 3 days before closing, and that outlines your final loan terms, your interest rate, and your closing costs. Review those numbers carefully and let your lender know if anything looks off. It's important because once you sign the closing disclosure, your loan terms are locked in and the closing is imminent. Pro tip: confirm with your lender exactly how much money you need to wire for the down payment and closing costs. This must be done before closing day. Now, the final step, closing day. So what to expect? On closing day, here's what happens. First, you're going to sign final documents. This includes the mortgage and loan agreements, title and escrow paperwork, and the closing statement. Your loan is going to be funded. So once everything is signed, the lender wires the loan funds to escrow. Title and ownership transfer is the next step. So the escrow company records the deeds with the county where the home is located, and that officially makes you the new homeowner. Now, this can be either the same day or the following business day, depending on what time of day your paperwork is signed. And the final step, you get your keys. So once the transaction is recorded, escrow is closed, and you get access to your new home. Now, another pro tip. Closing appointments usually run about 60 minutes and are now often done by a remote notary who will meet you at a convenient location on your schedule. Make sure to bring at least one valid photo ID for each buyer and borrower on the transaction. Now, escrow can feel overwhelming, but staying organized and meeting deadlines will ensure a smooth closing. So we want to work closely with your lender, with me, and the escrow agent to avoid any last-minute surprises. Don't disappear and stop responding to calls, texts, or emails because you feel stressed out. That's what I'm here for. If you're feeling overwhelmed, just reach out to me. Because if you disappear, you could not only lose the home, but you will almost certainly lose your deposit. Now, once you close, you want to not forget some of these really important essentials. You want to, of course, set up utilities in your name. You want to change your address with the post office and any important institutions where you get mail. You want to complete a review with your insurance agent to make sure all of your contents and personal effects are insured alongside the home, and update the garaging address for your cars. So now you know exactly how the home buying process works. You can move forward with confidence. And that's it. You now have a complete roadmap for buying a home in California. So whether you're just starting to explore your options or you're ready to make an offer, Being prepared and understanding the process is key to making confident decisions. Now, if you found this video helpful, be sure to click that like button and subscribe for more real estate information. And if you have any questions about buying a home or need guidance on your next steps, comment down below or reach out directly. My contact information is right here up on the screen and also down in the video description. So thank you for watching, and I will see you on the next video.